Welcome to Season 2 of the Cryptopulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
This episode is brought to you by Yield App, an innovative digital wealth platform that allows you to earn passive income on the world's leading digital assets with a single click of a button. Visit yield.app for more information. Adam, Omar, welcome to Cryptopulse. It's great to have you here.
Thank you, Kevin and Ben. It's great to be with you.
Yeah, likewise.
First of all, I would imagine a lot of our listeners don't know too much about what you're building on your platform, but they will know quite a bit about probably the current options that are in place. So Adam, maybe you could start off by telling us a little bit about AppPay and some of the problems you guys are trying to solve.
Yeah, certainly. Look, AppPay was founded in August 2020. Omar and I were actually in a cafe having a coffee talking about another project of ours, and we started to look at the buy now, pay later space. Both Omar and I have corporate backgrounds. Omar's in financial markets, trading and so forth, and mine's in corporate law, M&A, financial services law. So we have a bit of an understanding of the space, and we were just exploring it and looking at the whole DeFi space as well, and seeing how we could best put our our experience and our know-how and look at how we could integrate that into an actual project. And then we started to look at the buy now, pay later space, because it's a very hot space, not just in Australia, but throughout Europe and the US and other parts of the world. And we started to think about it, and we looked at DeFi and how we could actually do something in the space. And we started to work on what's now known as AppPay. What that is AppPay is the first of its kind decentralized finance platform that incorporates three emerging markets, being buy now, pay later, being cryptocurrency and fiat currency payments, and also blockchain and smart contract technology. So it's a global solution for shoppers, merchants, and marketplaces, and we're being built on it's dual chain. We're being built on Algorand and Solana, and that's to accommodate scalability, transaction costs, speed, and so forth. Just to go a bit more deeper into buy now, pay later, just if some of your listeners aren't too sure about what that is. Essentially, buy now, pay later is microfinance to customers, to shoppers, and they're credited or they're funded for a purchase. It's usually small amounts, around $200, $300, $400, even up to $1,000 plus, and then they have the opportunity to repay that over 4 equal installments. So the way it works is that they will they'll go to a store online, go to make a payment for a good or a service, and they can then use AppPay to fund that purchase. They will then make the purchase, we fund the purchase, we pay the merchant directly, and then the customer needs to repay us over 4 equal installments. Now, with AppPay, we're a little bit different in the way we operate. We don't charge interest. We're not charging late payment fees. All we charge is, whilst a customer has an amount outstanding, in terms of the repayments, we charge a $6 account keeping fee, which is charged on a monthly basis whilst they have an amount outstanding in terms of the repayments. What also makes us different, aside from the technology side of things, is we're actually rewarding, we're incentivizing our customers, and we're doing that through the AppPay reward token. So the way that works is a customer is once they make their repayments, provided they make them within the agreed timeline, they will actually receive AppPay reward tokens, which they can then use within the AppPay ecosystem and also within the AppPay eCommerce marketplace. They will also be able to trade them because they will be listed. In addition to that, we're also incentivizing our merchants, and by that is by when a merchant, a fully integrated merchant, makes a transaction, a successful transaction, they also receive AppPay reward tokens, which is equal to 0.5% of the transaction value they'll receive in AppPay reward tokens, which they can then use within the AppPay ecosystem. They can use them for marketing purposes, and they can accumulate them and then use them also for promotional purposes within to attract new customers, to existing customers, and so forth.
We had spent some time in the crypto space before we actually, so we didn't just fall into it. We'd been sort of trading the assets for quite a few years, and I think it was the curiosity around the technology that, for us, was an incentive to do a bit of a deep dive over a period of time and learn what the tech was. To understand the tech meant we could understand where the opportunities were, right? That was how we sort of, evolved these mechanisms to, in a way which we think is going to be, solving some of the solutions that buy now, pay later are currently experiencing.
The actual space, the whole e-commerce space is as of last year, was a $5.5 trillion USD space, and that's looked to grow by 2025 to at least over 7 trillion. And
that's
within
incredible. Let me just clarify the market space being the buy now, pay later space for smaller purchases, or the overall consumer credit space. Like, how is that measured?
So globally, 2021, that was $160 billion USD spend in terms of the buy now, pay later space.
And can I just ask a question on that, Adam? Because as you rightly pointed out, this is a real growing trend now. And the question I have is, why do you think the consumers are choosing these payment options at the checkout now more than ever? Why do you think this is growing as quickly as it is?
Look, buy now, pay later resonates with the millennials, with Gen Zs. They are moving away from credit cards. They're not attracted to a credit card. They're not attracted to the process in being able to get a credit card, the application process, the checks and balances that credit card companies and banks undertake on that customer. They're not attracted to the high interest rates. They don't see credit cards as being a sexy solution. They like buy now, pay later. They like the ease of it. They like the speed of it. They like how you can go on your device and shop and everything's there for you. It's really the millennials and the Gen Zs that have been drawn to this space. And by 2025, it's forecast to grow in terms of that e-commerce spend to be 5.3% at least of that e-commerce spend, which equates to at least to over 370 billion USD.
So actually what we're seeing then is that buy to pay is coming in as a replacement to credit card borrowing versus it being another line of credit that millennials are taking out alongside their credit cards, right? This is actually a shift in consumer credit habits.
It's definitely a disruptor.
Right.
I guess the other thing, we've got in our white paper, there's one chart in particular which pretty much it basically puts credit card adoption versus buy now, pay later adoption. And where you can see credit cards falling off a cliff in terms of the uptake, you can see the opposite happening in buy now, pay later. And as Adam said, it's driven by millennials and Gen Zs. They just simply don't see credit cards as being engaging for what they're trying to do. And I think that's one of the primary things that's driving growth in buy now, pay later.
And I think also another market opportunity that we've identified is with AppPay, is having it placed in NFT marketplaces, online gaming platforms, in the sports place, e-commerce for professional sporting teams. And the reason being is because we've gamified AppPay through the tokenization and rewards and so forth. That really resonates well with the demographics that are attracted to those spaces, to the NFT marketplace, to the online gaming and so forth. So we really see AppPay being the buy now, pay later solution of the future, but also for these current marketplaces that are just exploding at the moment.
Yeah, I totally get it, and I think you guys are on the right side of that sort of growth curve now. I want to go back to that first meeting that you guys had in the coffee shop. So you'd established that there was a need for this in the DeFi space. And one of the things that we always love to ask entrepreneurs and founders when they come on the show is where did you go from there? What was the next step? I mean, how long have you guys been building this, and what were the challenges?
The next step was the research. And that was the deep dive into the buy now, pay later space. Obviously, here in Oz, we've had quite an explosion. I think Australia initially was probably the country that was driving that space, and we had a number of startups that went from zero to hero in a short period of time. And so we had some good we had some good benchmarks which we could work from, and some a knowledge base that was already out there as far as Australia was concerned. Obviously once we understood the space really well, it was just a question of, okay, what are the problems with it? How can we differentiate? How do we make app pay more exciting, more innovative, more efficient? That was essentially, how the process sort of evolved.
We've also developed a few other things in terms of app pay. It's not just the buy now, pay later solution, but it's also being able to pay in crypto, pay in stablecoin. So a merchant can essentially a customer can essentially make a purchase using the app pay wallet and pay in either whatever the merchant will accept, whether it be stablecoin, crypto, or other forms of crypto. And in addition to that, we've also developed an API, which essentially means we can plug in aspects of app pay into existing buy now, pay later solutions or platforms in the centralized world. We can integrate app pay into merchant payment gateways, and we already have one partnership in that space in the US, which automatically gives us access to in excess of 15,000 merchants. So what that means is we can integrate app pay into the merchant payment gateway, and they can then provide the solution to all their merchants within their merchant payment gateway, which they can then in turn provide the solution to their customers, and so forth. And then we can also dress it up and white label it and make it a brand can have their own buy now, pay later solution. So, for example, you could have Nike buy now, pay later with Nike rewards, all powered by app pay if they wanted to.
That's such a great idea. So the idea of the reward token, people can, that is sort of a white label token as well. So they can brand it as whatever reward token they want. Because I was going to ask you about the reward token side of things, because how does that work from a tokenomics perspective? How are people being able to be rewarded for like paying on time, and how are merchants, how can they be rewarded as well financially?
Just to clarify a couple of things, in terms of the API, they wouldn't be getting the app pay token. We could create a bespoke token for them, or something that would be suitable for their own, aims and usage. But obviously, they would have access to the infrastructure. So that's one thing, and the expertise from our teams. The app pay token itself, it does act as a reward token, but it's also a governance token. So essentially, when we talk about the tokenomics of it, if we look at the breakdown in terms of how the protocol actually works, it's a decentralized protocol, which essentially means all aspects of the protocol will require different types of participants to make it all work. So the funding mechanism, which is typically how, where banks would normally play a role for buy now, pay later through like funding lines specifically for them, we've created what we call the stablecoin staking mechanism. So basically, anyone who wants to play a role in funding app pay can simply stake one of the approved stable coins. And what they get for that is they get a yield that's derived from the revenue pool, but they also get a farming bonus. Now, the yield from the revenue pool is paid to them, in the denomination which they've staked. So if you've staked USDC, then that bonus is paid to you in USDC. But over the term of your stake, you're also farming AppPay tokens, right? So depending on your term, you'll be allocated a percentage, a fixed percentage over that timeline as your farming bonus, and that's paid to you in AppPay tokens. So that sort of is the funding mechanism. But as Adam mentioned earlier, merchants are also rewarded. So if you're a merchant and somebody executes a transaction in your e-commerce store or in your store, you get 0.5% of that transaction value paid to you in AppPay tokens, right? If you're a shopper who has made an acquisition, once you've completed your repayments, you will get a reward which works out at around 2.5% of your transaction value paid to you in AppPay tokens. Now, those tokens, as I said, are both a governance token and a rewards token, because what they'll do is, yes, they're rewarding you, but they're also going to give you a potential voice on the governance side. Whether you delegate your tokens as part of a vote on a proposal, or whether you actually stake them for a financial bonus, which they will have that ability to do as well. There is a versatility in how you use these tokens, even if you use them within the marketplace as currency, because we will support that as well. So there is I guess a variety of usages and functions and different ways where different participants can earn these tokens, both as a reward and also as a potential governance mechanism as well.
Yeah, it's fascinating. I kind of see what you guys are doing in terms of creating a DeFi project that actually integrates with the real world. I mean, we've seen over the last 3 years, hundreds of these DeFi things that pop up that actually have no real functionality outside of the crypto and blockchain space. And we always talk about the next wave of disruptors being projects and products that are solving things that people actually need solved. And I think the way that you've structured your governance token, actually, there's some real meaning behind it, which I think is great. How important for you guys was it when you were building this product to try and make it feel like a consumer product? Because, as I say, a lot of the things that we see coming through, actually, they're very difficult to use. They're really difficult to understand. The UI is complicated. Lots of difficult terminology. Is that something that you had in mind when you were building this?
From the get-go, really, because in order for it to be successful, it needs to be essentially relatively easy to use for those that are not literate in the blockchain and crypto space. I guess the model is somewhat made easier, given that there are, mainstream entities that do provide these services, and all we're doing is essentially looking at the best possible way to integrate, blockchain and smart contract technology into the mix, right? And where we can use it as a tool to incentivize or to engage with people that are likely to use these products. So, whether it was working out how to best utilize rewards. There is obviously within, the younger demographics, they're more likely to, take up technology at a faster pace. They're also the same demographics that are driving the growth in these products anyway. So right. I guess that makes our task somewhat easy, because when we considered the forces that are driving the growth in buy now, pay later, the demographics are the same demographics that are leading the charge in cryptocurrency and blockchain adoption as well. So essentially, what we're building, or what we have built, is not necessarily for the here and now. It is for the here and now, but we do realize we still have work to do in terms of education. Not necessarily on the user front. There will be education on the user front, but I think one of the real advantages and one of the real benefits of what we've built will, potentially be something that merchants are more likely to find interesting over time. the opportunity there really comes down to our unique merchant dashboard. It essentially is like a Web 3.0 type functioning merchant dashboard. It will give merchants the opportunity to have a two-way engagement with their customers, and we can talk about that, a little bit later on if you like. But yeah, essentially, that's some of the thought processes that have gone into it. But education will still be required, certainly in the for I would say that the next year and a half, maybe 2 years. But as users get their head around it, and it will be relatively simple, especially for those that already have experience within the crypto universe, then it's going to be pretty much straight.
Hey everyone, I want to say a big thank you to Yield App for sponsoring this podcast. Yield App is an innovative digital asset wealth platform that allows you to earn passive income on the world's leading digital assets. Now, what we really like about Yield App is it's a licensed fintech company built by a team with a strong background in traditional finance. Yield App offers instant asset conversions, fiat on-ramp, auto compounding, and security features such as activity log, transaction history, and more. So you simply deposit your digital assets and click earn to start receiving daily rewards. And if you're a corporate client, Yield App offers a security treasury for all your digital assets. Its dedicated relationship management team is on hand 24/7 to facilitate a stress-free experience.
Yeah, I hear what you're saying. I think you're right. Millennials, Gen Z, they already have an understanding of the language around crypto and blockchain and are much more open to accepting new products in that space. I think you're right. The challenge is going to come in trying to educate merchants who are perhaps already comfortable with the payment systems they've got in place, and slower moving ships, if you will. They're a little bit slower to take on this new technology. Yeah. So I guess my next question for you is sort of how do you see that merchant side evolving over the next 5 to 10 years? Do you think that some of the bigger merchants are going to be looking to really integrate this kind of product into their systems?
Look, I think, Adam and I spoke. I remember about 3 years ago, Adamo, when we were sitting there and talking, and it was during the bear market of 2018, and there were a lot of detractors around it, and our knowledge of what we'd seen before and what we were seeing at the time, and certainly, I guess, when the markets were heading south, we were watching a lot of the institutional flows coming in, so we knew there was going to be, it wasn't over as such, even though a lot of people were calling it that way. And we sort of agreed that the big corporates would, over time, see cryptocurrency as an opportunity to engage, with their customers at a higher level, probably enhance customer loyalty programs and such. And we've seen that. I mean, every day we're seeing big brands. Just yesterday, I think I saw Gucci, or one of the big fashion labels, was going to use NFTs or something along those lines to
Gucci's going to accept crypto payments.
Correct, that's right.
Well, they're trialing it in 5 stores. Yeah.
So there you go. And so we saw that coming, and it did play a role in what we were doing. There's no doubt about it. And we think with merchants in particular, we're making it easy for them. There are cost savings to be had in accepting a stable coin as payment, and especially the way that we've built it. The big saving is that their payment terminal fees typically run here in Australia at around 1.5%. We can pay them in a stable
enormous
coin.
amount, right? If you're doing it like a few $1 million or something of transactions every year, that's an enormous saving, right?
Correct. Because if we pay them in a stable coin, in a local stable coin, and that's another challenge for us as well, is finding the right local stable coin, especially since the bulk of them are denominated in US dollars. But if we pay them in a stable coin, we've worked out that we could eliminate probably close to 99% of their payment terminal costs, right? Obviously, it requires scale in terms of, like, if all their customers were using app pay or this type of merchant payment mechanism, then they would see some real savings, and that's going to take time. But I think we will see that gradually, especially as part of the education. But it won't just be about that. It'll also be about how we can help them engage their customers and enhance customer loyalty. Now, our unique merchant dashboard, it has its own digital wallet, which they get, right? So that's allows basically two-way flows. It allows them to accept stablecoin payments from us. So let's say if it's a merchant in the UK, then we can pay them in a sterling stablecoin. We might have to find one that has got the liquidity but we could do that. And they also get to earn our rewards paid directly into that digital wallet as well. We're making it easy for them because we're essentially saying, whenever you want to settle that, into fiat, if you want, you can just press this swap button and your digital currency flows back to us and we pay you fiat directly into your bank account, right?
How fast is that, out of interest, like from doing that to receiving in the bank?
Well, it'll be much quicker than that because it'll be essentially the speed of a transaction on the Solana or Algorand network. So on Solana, we're talking about a fraction of a second, right? And given that we'll have direct links essentially within the wallet frameworks in our ecosystem, it's going to be a fairly straightforward process. Beyond that, the other opportunity for them, as I mentioned, is the ability for them to initiate promotions, utilizing, say, their own token or NFTs, whether it's like an NFT ticket type of instrument, where they can engage their users around particular sales periods or particular product promotions and sales, right? They can tie that into their social media campaigns, and you've got there a almost like a holistic sort of marketing tool for the future for them, right? And that's where the other opportunity lies for merchants. And I think once merchants see that opportunity and possibly test it, the conversation becomes a little bit easier. I mean, it's not just going to be about the potential cost savings because they are there. It'll be about the other potential opportunities for them.
And what's your feedback been from merchants that you've spoken to? Because I think the biggest challenge you've got is the merchant uptake. So have you been speaking to any sizable merchants, and what's their reaction been, good, bad, and indifferent?
I'll let Adam answer that, but just before he does, I'll say it's easy for the merchants in a sense because we'll say what we say to them is we will pay you in either fiat or stable coin. So we're crossing that. We're creating a bridge over the two payment options. But Adamo, you want to tell them a little bit about the sort of response we've had from merchants?
Yeah, look, we've had great response, and not just in Australia. We are initially targeting your traditional merchants, your bricks and mortar merchants, your online e-commerce marketplaces, and so forth. And we've received great feedback, a lot of interest here in Australia, the US, out of the GCC region, and also in Europe. We've had discussions with some large sporting outfits in terms of sporting clubs. They're very interested in what we're doing. We've had some discussions. We're having discussions around integrating that pay into their e-commerce stores. So they're like their online fan stores and so forth. But it's also important to note that aside from your traditional merchants and your online stores, as I mentioned earlier, we are targeting as well. We're going a little bit outside the box in terms of what we're targeting as well, in terms of your online gaming, your NFT marketplaces, your esports, and we've had great reception there, and we've had a number of conversations, entered into a number of partnerships in that space as well. because they see the real value in what AppPay can offer. They can see how it really resonates well with their own communities. In terms of what we're doing, in terms of the whole tokenization of the platform and so forth. And then another aspect as well is the merchant payment gateways, which we mentioned as well, in terms of integrating their merchants and integrating the app through their payment gateway, and then being able to offer AppPay to their number of merchants, and then obviously to all their customers. And the important point to make as well is that we transact in both crypto and fiat. So we're not blocking out a sector. We're appealing to everyone. Everyone can use it. It doesn't matter if you're a crypto or fiat currency. It really resonates with the whole different ecosystems.
That's really smart, because that avoids that friction point, and it allows you to start working with merchants who want to use a traditional fiat system. And then as stable coins and crypto becomes more popular, they can then convert over, which I think is such an obvious thing to do. But I think so many people would miss that, because they'd be like, no, crypto's the future. People are going to be using stable coins. But try doing that as a business today. It's tough going, unless you're in the esports space or the NFT space. And of course, it's a lot easier. Yeah.
Well, we're actually incentivizing merchants who will accept a stable coin as payment, because the reward they get if they accept a stable coin is 1% of the transaction value, as opposed to 0.5% of the transaction value. So what we're saying to them is essentially, your normal payment terminal will charge you that, say, 1.5% for someone who walks into your store or pays by debit or credit card. We're actually going to pay you 1% of the transaction value. Yes, it's been paid in our native token, in our AppPay token, but we're giving you 1% of the transaction value. So it's not costing you anything, but you're actually being paid to do it. And it's in our interest to do that, because the more robust the stable coin payment mechanism is, the better it is in terms of, I'll take you back to our stable coin funding mechanism, right? The more diverse our stablecoin funding mechanism is, essentially what that allows us to do is essentially straight through payment processing. So we don't need to convert anything into fiat, or we need to convert less into fiat, right? There's less, I guess, currency exposure risks and all those sort of things that we need to be mindful of. It just goes straight from, say, if it's a merchant in the US and they accept the USDC or USDT or BUS, for argument's sake, then it just goes straight out of our USDC pool into that merchant's wallet, clean, and so on. So it's good for us, it's good for the merchant, and it's good for the entire AppPay ecosystem.
Yeah, it's great. I think, when I've seen these kind of payment systems built before, especially in DeFi, they tend to be built for the end customer. But actually, it looks like you guys have really built this with a sort of merchant first approach, which is smart, because those are the guys that are going to roll this thing out, right? And I'd like to just speak about that a little bit. So for any of our listeners who perhaps have online stores, e-commerce platforms, how can they integrate something like AppPay with what they've already got? I mean, do you have an API? How do they track payments through the system? Yeah,
so there's two ways that merchants can essentially get involved with AppPay. I mean, the wholly integrated way or method is basically through our APIs, which they'll be able to access through some of the big e-commerce platforms such as Shopify or big WooCommerce or BigCommerce, Magento, those sort of platforms. That's probably going to be the easiest process for them to integrate with, and beyond that. So that's where they will get access to our merchant dashboard, where they will have the option of fiat or stablecoin payment, and they will also have access to the rewards on every transaction that is processed utilizing AppPay. The other way a merchant can get involved in our marketplace, and it's probably more how we initially interact with merchants in some respects, is we do have a pool of affiliate merchants, or where we have affiliate relationships with these merchants, that's more of sort of an arm's length type relationship. It's not like a wholly integrated one. It does limit the sort of well, we're not able to pay them in stable coins. We're not able to offer them the bonus payments in the way of the the rewards, utilizing that mechanism. They're not able to access the merchant dashboard, and therefore they won't have the ability to use the digital component of that to offer promotions or rewards to their customers. But that's just more about us getting scale when it comes to our marketplace, and possibly integrating with marketplaces initially whilst we explore a deeper involvement or integration with them. But yeah, when we do go live, initially our key markets, as Adam mentioned earlier, are Australia, New Zealand, North America, the UK, and Europe. Merchants who are interested will be able to just go onto our website, go onto our merchant page, sign up for it, and basically fill out the online form, and then we would direct them to either Shopify or one of those platforms where they may already have some sort of integration, and the process from there is relatively easy.
Amazing. And just for anyone that's sort of interested in using the buy now, pay later feature, so the end customers at the checkout, because you say you guys, the official launch is coming up, right? How can they get involved? What are the social channels, and where can they find you?
All the social channels are on the website. They can go on the website and they can register their interest, and basically what we'll do is, when we get into the beta phase of the release, which is not too far away, we can include people who've signed up. They'll be able to download the app, have a better understanding of what it includes, what sort of features are available to them, and the processes by which they can apply for the buy now, pay later feature. Because as Adam said earlier, AppPay is essentially, I guess, initially two products within the app. You don't have to apply for the buy now, pay later feature. You can shop with whatever crypto you have in your wallet, right? So you can, you don't necessarily have to find a merchant that accepts Ethereum, because we'll pay that merchant in fiat. We'll just swap over your crypto into the necessary, currency that merchant desires, and make the payment on your behalf, right? So that's one core line of business. The other one is the buy now, pay later part of it. The buy now, pay later part is probably a little bit sexier, in the sense that it's operated through our smart contract framework. We've built our own oracles there, because we've got our own unique data points that are required, that drive the bonus payouts, the rewards, etc. It's integrated into some fairly quick and low cost blockchains, some of the funkier ones, and that's the sexier part. That's where all the rewards and the the merchant engagement and the shopper engagement and all that sort of process happens.
Perfect. Okay. Is there anything else that we haven't covered that you think our listeners need to know about? I mean, we've gone through quite a lot, but is there anything else that you wanted to finish up on before we say goodbye?
As Adam, did mention on a couple of occasions, the opportunity within the crypto space, possibly within other platforms. We've got a number of partnerships with NFT marketplaces, with GameFi platforms, and that will continue to be rolled out. And that's where part of the excitement there is around giving our partner platforms utility on AppPay, in AppPay's ecosystem. So that's where their tokens can have a little bit more functionality, a little bit more utility outside their normal scope, and also the same for AppPay tokens. And I think it's important for us to support the cryptocurrency universe as such, where the opportunities do lie, and that is also one of our primary differentiators from the existing buy now, pay later platforms. I think we talk the same language, so that's an opportunity that's worth pursuing. But beyond that, I think we've covered all that we need to at this point in time. So thanks for that.
Yeah, it's been great having you on the show, guys. I really love speaking to people that are building products that have real world use cases. As I've already said in the show, we hear so much about these sort of copy and paste DAOs and DeFi projects that really don't have any sort of core purpose. And I think, aside from you building what looks like a functional product, it's also really easy to understand. I think it's beautifully designed, and I think it fits into that kind of Web 2 space. It looks like a consumer product that we can understand and integrate. So I wish you all the best of luck. I think we'll absolutely follow the journey of AppPay. We'd love to know about the launch when that officially comes, and we'll give you guys a shout out on the show. But yeah, just to say thanks very much for joining us. I know it's late there in Australia, and we look forward to speaking to you again soon.
Thank you, Ben. Thank you, Kevin. Appreciate it.
Thank you very much. Thank you for having us.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Cryptopulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Cryptopulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.